Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello friends, this is Vijay Bhambwani here. I'm back in this video to talk about a new investment opportunity that I had talked to you about in an earlier video dated 8th of October 2021. Yes, I'm talking about the silver ETFs, which are now becoming a very rapid reality in the Indian equity markets. So far, Indian investors did not really have too much of a choice when it came to a bullion ETF because you only had gold ETF so far. And for more than a decade and a half, at conferences and at meetings and ideation sessions, etc., I used to ask a lot of people at the MCX and NSE and SEBI, etc., as to when the silver ETFs were going to be launched, and nobody really had a concrete timeline. Guess what? In October, when I made that video, it was because SEBI announced the permission in principle to the mutual funds to launch the ETF. And now, 3 mutual funds have actually gone ahead and applied to the SEBI for these ETFs, and the list is led by Aditya Birla Sun Life, Nippon India and Mirai Asset. Here, Nippon India is going to have a silver ETF as well as a fund of funds. So, what are going to be the semantics, whether you should invest or not, and more importantly, since I practice the 360-degree worldview of financial markets, the why of you should invest in these silver ETFs. You see, in my videos on gold, I have very clearly given a preference to physical purchases in gold, and now I'm talking about a silver ETF. Why? So the difference here is when you go to Zaveri Bazaar and you try to buy and sell gold, all right, the difference between the buy price and the sell price. If you go to the right guys, the wholesalers and the reputed paydees are traditional shops or wholesalers who buy and sell gold from you. The difference between the bid and the offer could be as small as 120 to maybe 150 rupees per 10 grams, which is actually very small. If you're paying more than this, you're probably overpaying. The unfortunate part about silver is that the difference between the buy and the sell price per kilo, now do remember I'm talking about per kilo in Indian rupees. It could start from 1200 rupees per kilo and go all the way up to 2500 rupees a kilo, depending on the market volatility. Now that's a lot of money, which is why investing in a silver ETF could actually make more sense, because when you buy and sell, remember your profits are not booked till you haven't sold and the money has come to your bank. So when you buy and sell, the bid and the offer price, the buying and the selling price, the difference of 1200 to 2500 can actually be crippling. And then in the physical space in silver, you would have to pay GST, which would be lost to you. And as an unregistered dealer, you would not, if you don't have a GST number, etc., you would be paying that out of pocket. In ETFs, that problem does not arise at all. And then I'm going to put you through, I'm going to get you up to speed about the semantics of this investment, how the silver ETFs are going to work, and what amount of your capital you should ideally put in silver. So now, is this silver ETF completely safe? I think yes, because just like the gold ETFs, these mutual funds will be required by law to appoint a custodian where the physical stock of silver will be stored equivalent to the amount of silver ETFs that they have issued to the public at large. So each and every gram, each and every kilo of silver that you buy is backed by physical delivery, and to that extent you are safe. What will be the purity of that silver and in what denomination? Now the standard 30 kilo bar is what will be held in physical. Remember, you and I as retail investors might prefer a 1 kilo bar, but these guys are going to be holding tons and tons of silver. So they will prefer 30 kilo bars in purity of 99.90 purity, 99.90% purity, which will conform to the London Bullion Merchants Association purity standards. Now, this is the best kind of purity that silver can basically provide. Will all the money that you put in the silver ETF be invested in physical silver? No. And what are the implications of all the money not being put in the ETF? Now allow me to explain. Some amount of money that you give to the mutual funds in the ETF component will be put in debt paper. Debt paper means government paper, bonds, treasury bills, etc., ranging from 14-day maturity to maybe even longer term bonds. Why is this? So as to meet redemption pressures, if any. If people want to pull money out of the silver ETF, they will be paid back by liquidating some amount of debt instruments and not touch that physical silver. 10% of the corpus will be set aside for trading in commodity derivatives. Now, maybe the fund manager at some point in time might feel that silver is likely to go down. Now, rather than sell physical silver and incur a lot of expenses and delivery charges, etc., the fund manager could simply go and short sell that silver in the commodity exchange. So for that purpose, either going long or going short, 10% of that corpus will be set aside for trading. Now, what will be the impact of setting aside this corpus for trading? My experience with gold ETFs is that one of the many reasons, or one of the few reasons rather, why gold ETFs trade at a discount to physical gold is because the market says, hey, the fund manager has been given a certain amount of leeway to trade in gold commodity derivatives, and it is not necessary that each and every transaction results in a profit. There could also be a loss. So let us assume a certain amount of money might be lost, and therefore the NAV of gold ETFs is somewhat lower than the physical price of gold. But it does not mean that your appreciation will not be as good as physical gold. That same discount will apply whenever the price is going up or down. So if physical gold is going up by 3%, remain assured your ETF will also move almost, I'm saying almost in lockstep. So either it will go up by 2.8, 2.9% if the physical price goes up by 3%, or it might go to 3.1% when physical is rising by 3%. It will be more or less in lockstep. But I'm telling you the reason why there could be a small discount. Now, you should not get alarmed about this because all the money is not invested in silver, and therefore the market is basically predicting or making a leeway for some potential loss. Now, as an investor, will you incur any charges for investing in this silver ETF? The answer is yes. As a first-time investor investing in a new fund offer or NFO, if you are investing rupees 10,000 or higher, you will be paying 150 rupees as an initial charge. For retail investors investing less than 10,000 rupees, that 150 rupees will not have to be paid. So the smaller guys have been taken care of, and it's been seen to it that they do not pay these charges. Now, what will be the expense ratio? We all as mature investors want to know how much of our capital will go away towards providing for fund expenses or enterprise expenses, salaries, electricity bills, transport charges, etc., etc. As per SEBI, silver ETFs will not be allowed to charge more than 1% of the asset under management or AUM as expense ratio. So it is a fairly low cost instrument. If it had been a very actively traded fund, which many of these equity mutual funds are, because the fund manager keeps buying and selling a lot, there are execution costs, commission, taxes and other charges, the expense ratio can be higher. So in this case, the expense ratio will be 1%. Now, whether you should invest in silver ETFs, I have in the beginning of this video told you very categorically, yes, you should. And you should also refer back to the 8th of October video that I have already recorded for further details. And how much money should you allocate to silver? Now, if at all you have 100 rupees to invest in the market, I think depending on your risk appetite, you should set aside 15 to 20% of your corpus for bullion investment. Now, assuming that you are segregating, say 20%, hypothetically 20% of your corpus towards bullion. Of that 20%, a minimum of 40% should be towards silver. Now, let me illustrate to you in rupee terms. Supposing you have 100 rupees to invest, at least 15 to 20 rupees out of that 100 should go in bullion, because I'm expecting inflation to go up from 2022 onwards. Now, out of that 20 rupees, you should invest at least 8, if not higher, in silver and the remaining in gold. The problem with silver is that the prices tend to be a little more volatile than gold, and therefore people tend to allocate a lower amount in silver. But believe me, silver being a poor man's gold, I think the possibility of silver being a better hedge against inflation is better than gold, for the simple reason that I have told you in my earlier videos. Silver is not only a store of value and a semi-precious metal, it is also an industrial metal. You cannot have electric vehicles, you cannot have 5G technology, you cannot have photovoltaic cells to make solar power without silver. So yes, net, I think you should go ahead with this shiny new investment, and I believe it will be just a couple of weeks before these new fund offers will be available for you to subscribe. I hope you have a profitable investment in silver. Thank you for your patience. This is Vijay Bhambwani signing off for now, not before reminding you to click like on this video if you liked what you saw. Subscribe to my YouTube channel if you haven't already done so. Click on the bell icon to receive instant alerts about fresh videos being put up out here. In the comment section, good, bad or ugly, I'd love to hear from my viewers, and help me reach out to fellow like-minded investors and traders by referring my video to your family and friends. Thank you for watching this video. Take care. Bye-bye.